Hey guys, welcome back to Lucid Trading. I am Gara, and today we're going to be doing an analysis for NIO stock. As you guys can see, NIO has been pretty much trading in this bearish channel for over a week now, which was quite predictable. We did predict that that would be happening. Right now, it is looking a little bit more bullish. It seems like we're going to be heading towards this $59 and $60, where I think we could potentially be heading down. But before we go further with this analysis, guys, smash the like button, subscribe to the channel if you haven't yet. I would really appreciate that. Also, remember, I am not a financial advisor. Keep that in mind. I only make these videos for educational purposes. So let's continue right away. So resistance right here at the bearish channel. Potentially hit that level, come back down to 57.8, and then gradually come down to the 56, bouncing off again, kind of moving in this fashion. At the 54, we could potentially be bottoming out and then breaching above the bearish channel. That is currently what I'm seeing right now for NIO stock. It's going to be a little bit more bearish for the coming days, and I would say after the weekend as well, until about Wednesday, Tuesday, when we're most likely going to see us move higher from there, because we also have a catalyst coming, which is going to be the January deliveries. It will be released in the first week of February, at least the end of the first week. So definitely going to be a catalyst. Guys, we're going to look at every single time frame, the midterm, the long term. We'll come back to the short term time frame in a second. So let's just get into this. Let's go to the 1 hour. All right, so looking at the 1 hour time frame, we could be heading towards the $60, like we've said, gradually come down here, see support at this 200-day moving average, and fill this gap right here as well. So it would come back down to right here, the $56, $55 range, potentially bouncing off again to the 57, but then heading down, bottoming out at the 54, and gradually rallying upwards until I would say the end of January. So the MACD would be pretty much looking something like this, and the RSI something like this. And it would pretty much be moving above this bearish channel, breaking free from it, and that would be our run towards the 58, and then gradually towards the $60 and above. But right now on the 1 hour time frame, as you guys can see, it's not looking really good for the coming days. But I think dollar cost averaging it would be the right choice, because I do think it will be running upwards in February, because we still have deliveries coming, we still have earnings coming, but it's still for the short-term time frame stuck in this bearish channel temporarily. So keep that in mind. Now let's head over to the 4 hours. All right, so looking at the 4 hour time frame, the midterm, I would say, time frame, we're seeing here the MACD is about to be crossing what I think initially is going to happen with the price is, like I said, to the $60, test it, come back down to the 55, break out of the bearish channel, see a bit of resistance, but then ever so gradually going above, filling the gap to the $60 to about $61, consolidate here, and just keep on rallying. So that could be happening pretty soon. Like I've said in the past, we would be stuck in this bearish channel for a while, bottom out, then move out of it. Initially, I thought it would be pretty much bouncing off right here, but you know, we've been seeing a lot of bullish kind of catalysts with Biden getting inaugurated. There's going to be a lot of support coming for EVs and many more things, but we have to be careful, because obviously there's a lot of things happening in China, lockdown, pretty much a lockdown coming up for China. That is also going to have an effect on NIO stock. But so far, the stock is moving fine, and I think we'll be able to rally for the deliveries, potentially all the way back to the 64. See some resistance right here, coming back to, I would say, $60, and then rallying above for the actual deliveries. And the 4 hours would look a little bit like this. So if I could draw this again, so something like this, kind of cancel that out a bit, and then go up like that. And the RSI, something similar to this. All right, so I think we'll have a spike right before deliveries. We have a small corrections, and then a couple days before we get the deliveries for January, we spike upwards again, potentially to $70, which I'm going to show you right now on the daily time frame. All right, so on the daily time frame, I think what's going to happen is, just like we said, initially move up, come back down, fill the gap to the 54, 55, then rally upwards to the 60s, and just keep on going to the 64, we would see a consolidation and I would say correction, and then from there we spike upwards for deliveries, potentially all the way to the 70s, and then after deliveries, potentially coming down again. I would say all the way back to the $60. We would consolidate again and see potentially another spike for earnings. So the MACD does look like it's about to cross, which it will briefly do. Brief cross here and then gradually keep going upwards. RSI, same story. So still looking pretty fine now until about, I would say, the middle of February. So definitely a stock worth dollar cost averaging at this point, after having seen this correction all the way from the $67 until the, I would say, $54, $55 range. So looking pretty sweet right now on NIO. Let's go to the 30-minute time frame and draw the pattern for what is coming for the next coming days, and I would say after the weekend. All right, so looking at the 30-minute time frame now for NIO stock, what I think is going to be happening, like I've been saying, it's going to keep rallying towards approximately $60 and maybe a little bit above that, going to the $61, then gradually coming down again to the 56, and I would say potentially to the 54, and bottom out right here, gradually coming back up to the 58 again, and kind of going sideways before starting to rally to above the $60. Now that is going to be happening next. It's looking a little bit different than initially what I initially drew, but definitely still not looking very bullish, I would say. Still most likely going to be a little bit bearish. The MACD probably moving something like this, and then kind of going up, and the RSI moving something like this. So I would say maybe you'll be getting a very nice buying opportunity for the next catalyst, which is going to be in the first week of February, the delivery update that they usually do for each month. I think it's going to be a very, very nice one for the month of January, and it's definitely going to be spiking upwards above the $60, potentially even above the $70. So getting in at these prices at $55, $54, potentially, 58, is still going to be okay, and I think it's going to be nice for a short-term trade. Guys, this was the daily analysis for NIO stock. I hope you enjoyed it, and if you did, show your appreciation by thumbing up, subscribing to the YouTube. Would really, really appreciate that. That would be awesome. And also, check out the Patreon, where you can get early access, buy and sell signals, and consultations. You can also check out the Lucid merchandise store if you ever wanted a Lucid t-shirt or hoodie. And we also have a Discord community that you can be a part of. All the links are going to be down below in the description. Definitely check that out. Oh, we also have social media like Instagram, Twitter, TikTok. So if you want to be following me there, I'll be giving updates on a daily basis. Definitely do. Guys, this was Lucid Trading. Have an awesome trading day. I'll be seeing you very soon.